Hello everyone, my name is Dan and I'll record a very cool video for you all today because in this one I will be teaching you a strategy that ICT himself said that if you successfully follow for 90 days, you will be able to quit your job. So if that sounds interesting, let's get right into it. Alright, so before I jump into the rules of this strategy, I must admit that I think it is pretty unlikely for someone to quit their job 90 days after they start trading. However, it is not impossible. I wanted to mention this because I saw so many people in the past quitting their jobs way too early, and in my opinion, it would be best to take things one step at a time. The first step would be to watch this video fully and make sure that you understand the strategy. The second step would be to test it, to backtest it and forward test it on a demo, and then take it to the live account. And if you find yourself profitable on the live account for, let's say, 3 to 4 months in a row, only then, in my opinion, you could consider quitting your job or getting a part-time job. But at the end of the day, this is just my personal advice. Everyone has the freedom to do whatever they think is best for them. Okay? So now we can get right into the strategy. So let's go over the rules. First things first, we will use this strategy only on these suggested pairs. NAS 100, Euro USD, GBP USD, and SPX 500. For this video, I will use NAS 100. Okay. Secondly, we have to look for the setup between 9:30 a.m. and 11 a.m. New York time. Okay, that will be our interval. So 9:30 a.m. New York time is right here. Okay, is 4:30 p.m. My time, and then 11 a.m. New York time is 6 p.m. my time. Okay, so this will be our interval where we will look for the setup. Then the third step would be to mark up the 5-minute buy side and sell side liquidity swings that form right before 9:30 New York time. Okay, so in order to do that, it is very simple. I will use the bar replay to show you an example in real time. So this is exactly where the candle closed before 9:30 New York time. Okay, so now what we have to do is mark up the sell side liquidity swing, which will be this one here, and the buy side liquidity swing, which will be this one right here, because this is the candle that closed right at 9:30 a.m. New York time. Okay, so this is the sell side and this is the buy side liquidity. All right, so the third step is completed. Now let's move on to the next one. After that, when the sell side or buy side liquidity gets taken out, we want to identify a liquidity sweep plus a break of structure on the 1-minute time frame. Okay, so we either want to see the sell side or the buy side liquidity get taken out, and after that we will go ahead on the 1 minute and look for a shift in momentum, which is pretty much a liquidity sweep followed by a aggressive break of structure. After that, after the liquidity sweep and aggressive break of structure, we have to identify a fair value gap. That's why I am mentioning aggressive break of structure, because if we have a aggressive break of structure, we will also have a fair value gap. Because guess what? If we don't have a fair value gap, there's not going to be a trade. Okay, so no fair value gap, no trade. Okay, and of course we will also have to mark up the newly formed 1-minute high and low. After we identify the fair value gap, we place a limit order right above or below it. So it is very important for us to identify the fair value gap. If we have no fair value gap, we have no trade. That's why we need a aggressive break of structure. Okay, the stop loss will be placed at the 1-minute low or high, and the take profit will be the 5-minute swing high or low. Okay, so these are the rules, and now I will go over this example and show you exactly how we will apply the strategy on it. But before we do that, I also wanted to let you know that if you want to see the trades I am taking every single day, you should go ahead and check out my SMC trading group. It is the first link in the video description. Okay, so right here we are at 9:30 a.m. New York time. Once again, we marked up the sell side liquidity swing and the buy side liquidity swing. Now all we want to look for is either the buy side or the sell side to get taken out. Okay, so let's play the price on the 5-minute, and we can see that the buy side has been taken out. So now the next step would be for us to drop down on the 1-minute time frame, okay, and look for a shift in momentum. So let's see if we get it. Okay, let's see if we get it. Okay, all right, nothing yet, and yep, we do have a shift in momentum now. Okay, so let me zoom in to show you exactly what I'm talking about. So we have a liquidity sweep here. Okay, this is the liquidity sweep. We have this high here, and price went higher above it and swept liquidity. And then we also have a BOS right here. Okay, if we zoom in, this week right here went lower than this low right here. Okay, so we also have a BOS. So now all there's left is for us to identify the fair value gap. Do we have a fair value gap here? Yes, we do have it. It is clear as day. This is our fair value gap right here. Okay, we can see that the low of this bullish candle is an overlapping with the high of this bearish candle. So this is the fair value gap right there. Now the next step would be, and we know it from the rules, to place a sell limit on the bottom of the fair value gap. In this case, the stop loss will be right above the high, because like I said, we have to mark the high and low on the 1-minute. Okay, so that is the high and this is the low right here. So the stop loss will be right above the high, and then the take profit will be the 5-minute low, the 5-minute swing low that we identified before 9:30 a.m. New York time. Okay, so this will be our sell limit order. This will be our sell limit order based on this setup. We identified the shift in momentum on the 1-minute after the buy side liquidity was swept. And then we also identified the fair value gap. We placed the sell limit on it, stop loss above the 1-minute high, and then we targeted the sell side liquidity. Okay, so now let's play the price forward and see how this setup played out. Okay, so we can see that we triggered right here, our entry trigger right there, and oh, we faced some drawdown, but now price is starting to reverse, and we can see that it is running in some beautiful profits, and right here the profit was smashed. The take profit was smashed. This was a very nice 1-to-5 risk to reward ratio trade. So if you would have risked $100, you would have made $500. Okay, and yeah, this was a example of this strategy. This is how simple this strategy is. Okay, so let's go back on the 5-minute time frame to quickly recap it before we end the video. So once again, we identified the 5-minute sell side and buy side liquidity swings that formed before 9:30 a.m. New York time. After that, we waited for the buy side or sell side liquidity to get taken out. The buy side liquidity was taken out in this example here. Then we dropped down on the 1-minute time frame, and we waited for a shift in momentum, which means a liquidity sweep followed by a aggressive break of structure. We say aggressive because we want to see a fair value gap. After we identified the fair value gap, we placed the sell limit on it, below it, basically below the fair value gap. It would be above the fair value gap if it's going to be a buy limit scenario. The stop loss was above the 1-minute high, and then we targeted the sell side 5-minute liquidity that we marked up before 9:30 a.m. New York time. And yeah, this is pretty much the strategy. I hope y'all understood it. If not, make sure to let me know in the comment section, and I'll do my best to clarify it for you. And feel free to share and like it if you find it valuable. And make sure, like I said, to backtest it, forward test it. And as always, feel free to reach out in the comment section if there's anything I can help you with. And till next time, a very cool ICT strategy will pop on the screen right now. This will be the silver bullet strategy. So if you haven't watched that video, make sure to go ahead and watch it. I think that you will enjoy it. And lastly, I want to wish you all the best and take care.